Welcome to the WA Podcast, where the goal is to motivate, inspire, and share success principles. I'm your host, George Masri. Thanks for joining us. On this episode, I interviewed Evan Ungar and Jordan King. Evan is a performance-driven entrepreneur. He's currently a partner at Choice Renovations Canada, Tuk Developments, and Tuk Capital. He broke 2 Guinness World Records for the highest standing jump. He owns a multi-million-dollar portfolio in the Greater Toronto area. And his partner, Jordan King, has set up several successful companies since 2011, and he's also involved in the companies I mentioned before. On this episode, we discussed how the real estate and entertainment industries intersect, how music is an asset class, where Evan and Jordan are investing today, where the opportunities are, the real estate investment criteria that they go after, what their roles are within the company. So I know you guys are going to enjoy the content here. I will again ask you to make sure to share this with a friend or family member. Let's get the word out there. I know there's somebody out there that can listen to something inspiring instead of all the negativity that's around in the news and whatnot. I just wanted to give a shout out to a few people that have left us reviews on the show. So Petunia79 Lincoln said that the show is very informative, great at holding the audience's attention and engaging with guests, great perspective on topics he discusses. We had another one here from Harb Fan, good questions, good content, and one more from Ocon90. George runs an excellent podcast and keeps his listeners informed. Keep up the good work. So thank you very much for all the reviews. I will ask you, if you guys enjoy the show, please leave us one as well on the Apple Podcast platform. You can do it on your Mac or on your iPhone. There you go. Enjoy the episode. All right, I'm here with Evan and Jordan. Thank you guys for joining me. We're all kind of in separate locations here, but hopefully everything turns out all right with this recording. It's kind of a new platform here that I'm recording on, but it should be all right. So tell me a bit about yourselves, guys. I normally like to start off by asking about your childhood and where you grew up.
Oh, man. Well, we both grew up in Oakville for most of our, I would say, youth that we can remember. I'll let Jordan speak for himself, but yeah, born in Montreal, but moved to Oakville, Ontario when I was 7. Stayed here till I was 13. Moved to California. Came back when I was 18, and been in Oakville since.
Cool, awesome. What about you, Jordan?
Born in Toronto, but I moved to Oakville, I think, when I was 6 months. So Oakville's been my home for the majority, my whole childhood, really. Now I'm in Hamilton area. That's where I am now.
Okay, cool. How did you guys meet? Was it something like through school or something, or what was that?
Yeah, I think we got acquainted just through school. He went to school. We both went to school in Oakville. I actually went to Holy Trinity. He was at Iroquois. My parents lived by Iroquois, so I was always very acquainted with all the guys that went to Iroquois. So I think through parties and get-togethers, we were acquainted. But then I actually trained at a gym that he worked at the time. And that's where we really got acquainted. We really started talking. We really realized there was synergy. And then that kind of just transformed into a full-blown partnership.
Very cool. Very cool. So tell us a bit about that. What are you guys doing these days? What's your partnership like?
That's
the real question. I think we have 2 main focuses right now: real estate and entertainment. I would say are our 2 main focuses. And in the real estate realm, we have layered our businesses to kind of support one another and have different hands in the industry. So we have everything from our investment company, Tuk Capital, to our development company, which is Tuk Developments. And we have our renovation company, Choice Renovations Canada, and a property management, which is LISO. And then on the entertainment side, I'll let Jordan run at it a bit with you there.
Yeah, entertainment side, so I was originally involved in entertainment, music more specifically, and live events. When Evan and I got into business, I kind of took a step away from that, got into the construction, the real estate acquisitions, all that fun stuff. Got to work with quite a few notable hedge funds, understand how companies of that nature work, the finance world, investment world. And then as I saw in the music industry, all these deals are happening and the financial world is starting to pay a lot more attention, then I dabbled back into music. So I'm part of a record label called Guinness Music. We actually just won a Grammy last weekend for production on the Bad Bunny album, which was really exciting. Now what we're doing is, like I said, is just kind of helping and spearheading certain acquisitions within the entertainment realm and connecting the dots between your investors and your content creators, so to speak. So it's been exciting, especially during this time. Like I've never seen anything like it before, but it's really come full circle to see both my passions kind of align and come together in one, because there was a point in time where I felt that it had to be one or the other. I couldn't do both. So it's exciting to see it come full circle.
That's really interesting. Like, how do the two industries tie into each other? How does that work? Are you guys creating a tie, or explain that to me?
Well, I like to think I'm creating a tie, but there's also already an existing tie there. And what it is, it's just music is now being viewed as a strong asset class, really, as an A asset class, which it hasn't been in the past. And with that, you're seeing a lot of major funds, major investment companies, hedge funds. They're trying to get a lot of these publishing and these masters on their balance sheet as an asset. It has all the fundamentals. It cash flows. It goes up in value. It goes up in equity. Over year. So it has a lot of the similar principles. So I think just timing, really, right? I think we just timed everything, and we're at a point now where both worlds are just mixing. There's too much money going on in the music industry for it to be ignored. And I think a lot of outside investors and businesses are starting to take note on, hey, you know what? This is an asset that I think we want to have in our wheelhouse and we want to have in our portfolio.
Yeah, because at first when you started talking about that, I thought you were tying in like musicians with real estate. Like going to musicians and saying, hey, you're making all this money in the music industry. Let's take that money and put it into these projects that we're working on.
So that actually is a thing as well, but it's not. It's not kind of like how we've started it, right? We're starting on more of the institutional side and providing funding that way and aligning those acquisition deals. Now, on the content creator side, Evan and I always have the mindset of anyone we work with. We always preach equity. We always preach business. We always preach expansion. So what we're doing as these certain content creators are receiving a lot more income, we are the guys to help them out and continue to make more diverse placements. So we would say, hey, you know what? Right now you just secured a huge bag. Let's keep that bag. Let's buy some real estate so it lasts, maybe when your career isn't as hot 5 or 10 years down the road.
Sure. I love this. Like, I really want to dive into this a little bit, but before I do, Evan, I want to talk. I know everyone probably asks you about this, but let's talk a little bit about the world records and your accomplishments as an athlete as well.
Yeah. What would you like to know about them?
How did that, like, first of all, how did the idea of breaking a world record for the highest jump come to be, and how did you train for that and all that?
I think, one of the reasons I did it is also one of the reasons Jordan and I work really well together and do business together is we're just really competitive. And when we get together in business, we focus that competitiveness and it takes us quite far. But basically, I was working at a gym in Oakville at the time, and I had this colleague of mine. He's a semi-pro volleyball player, and he was always challenging me to, like, who can bench more, who can squat more, who can do this, who can do that. And, anyways, that's kind of where it came from. And one day he was like, who can jump higher? And I was like, all right, let's do it. So we set up the boxes and we started jumping. And by the time we had finished jumping, we had a small crowd around us, like, clapping. And I beat him that day. And then we Googled it, and we're like, we were a foot away from the Guinness World Record, which, like, in terms of a max jump is a significant amount of height. But I don't know. It was that day I was just like, I decided, I was like, I'm going to break this record 100%. So I trained for a year. I broke that record. And then a year later, I trained again and broke the single leg highest standing jump record as well.
So how exactly do you train to jump higher? What were you doing?
A lot of weightlifting. Like like very rarely jumping. To be honest with you, everyone's like, "Oh, you must jump all the time." Like I barely jumped. I jumped maybe like a couple times a month, but most of it was all heavy, and a lot of dynamic weight training as well. I mean, I have videos of Jordan and I in the gym. Like I'm doing like jump squats with a 135-pound bar, like fully jumping off the ground with it. And so so there's dynamic movements, and then there was from one extreme of like jumping with the weight to the other extreme of quarter squats, like quite literally the videos that you look at and you see online, and you're like, the guy's not even squatting all the way down. Like I purposely had like over 400 pounds on a quarter squat, just to hit that peak of the motion when your legs are at extension. So
did you have a coach for this, like somebody specifically that's working on helping you jump higher, or were you just kind of working with a general personal trainer, or nobody at all?
So, I mean, I was in the health and fitness industry, so I worked at the gym. I have a personal training background, so I have some of that knowledge. But 100%, I had a couple of trainers that were helping me write programs, and like sometimes actually writing the whole program for me. And then lots of chiro and physio appointments in between.
All right, cool. And maybe last question on this. So I saw that you were on the Joe Rogan Experience. Is that right?
He talked about me on the Joe Rogan Experience.
He talked about it. Okay, cool. That's very cool. Yeah. He saw your video online and just brought you up. That's awesome. Okay, exactly. So let's dive back into what you guys are doing. So I think you mentioned that you guys are investing kind of in Hamilton. I think you mentioned a few other places. So what kind of properties are you guys getting into and investing in?
Yeah, so we have property. I mean, we have multiple properties in Oakville, and then Oakville is kind of our furthest east, and then we have everything west of that. So Oakville all the way to Niagara up to Port Colborne, and then as north, Sault Ste. Marie and in northern Ontario as well. So we're fairly diversified in terms of location, but all west of the GTA.
Yeah, and I think in addition, like our investment strategies change depending on the time. For instance, in a time when markets are going up 25%, 30% year over year, then we were buying a lot on future value, right? Built-in equity, things like that. Now it's kind of shifted as the market has been stabilizing and coming down a little bit. We're now focused more on cash flow. So, up north, tertiary markets, up by the Niagara region, out in the London area and surrounding areas. Those have been areas that we've been focusing a lot of our investments currently.
So if we can kind of dive into the Niagara region, because I also invest there. What kind of properties are you guys going for? Are you going for single families, duplexes, or are you going after apartment buildings? What is it that you like?
Both, but less the single family. So multi-units, like Jordan said it exactly. Like, when the market was picking up a bit hotter there, past couple of years, we were buying single family homes and flipping them in the Niagara region. But in this market that is fairly volatile and the prices are going down, we're not really flipping much. So we're staying away from that. We're focused on cash flow, focused on long-term plays. So we're buying multifamilies in the Niagara region because that's where we're getting the desired cap rate from. And that ranges from duplexes to apartment buildings. So, yeah.
Can you tell us a bit about the structure? Like, are you guys investing personally, or are you raising capital? Are you doing it through joint ventures or through limited partnerships?
So one thing that we take pride in is we did a lot of it ourselves, right? We're self-funded. We use our own capital. We really got in, which is a lot different to a lot of other people in this industry, not knocking it. But one thing that we have is if we can comfortably invest our own capital, then we open the doors to work with anybody else, right? We're not ones to kind of play with people's money unless we know exactly what our plan is and we have an exit strategy. So it started with our own capital. We invested in another company as a passive role. Then we took on more of an active role. So we were the investor and we were the operator. We did that for a little bit, got a lot of success. And then more recently, we have now, we're doing the same thing for larger companies and hedge funds, right? So on the one side, we're kind of doing everything, 5 units and under. On the other side, we have a partnership where we're kind of doing everything that is 6 units and above. But we're kind of at the comfortable place, I should say, where there is a home for every deal we're working on, depending on what makes sense at that particular point in time.
Sure. So how did you guys get involved with hedge funds? Like it sounds like they're kind of bringing the capital. Is that right?
They're bringing the capital only for the deals we have with them. They're not funding our personal holdings or our, like, what I would call our holdings. They're funding either the partnerships that we have with them or their own deals that we're doing turnkey for them. And we've just networked our way into the door. Really, I mean, Jordan and I began business together because of our networking skills. He had a huge network of people. I had a huge network of people, and that's really how Tuk Capital was started. Was because originally we were like, hey, we had this. Actually, it was in crypto, but we had a problem that people wanted to get to know crypto better and buy Bitcoin and didn't know how. And so we were like, well, we have people who can buy large amounts of it and safely move it into wallets before these exchanges were really popularized. And so we just started connecting the dots in our networks. And it's really started from our first business up until working with these large corporations and publicly traded companies. It's the same thing, just network to get there.
Yeah. Out of all the people I've spoken to, I've never heard somebody say that they kind of invest with hedge funds or using kind of hedge funds as a backer or as a capital partner. So just by networking, like I'm just curious, like how does that happen? Do you just meet with somebody in the hedge fund and explain to them what you're doing, and like can you just break down the technicalities a bit?
I think that part of it is building good rapport and doing that networking and kind of having that conversation. But a lot of it is a proven track record, right? We have a proven track record of the deals that we've done and the success that we've had. And I really want it to be noted what Jordan said is like all of the deals that we did to get to where we are were self-funded in the beginning. So when companies or partners look at that, they look at it and they say, all right, these guys used all of their own money. Like, they're not messing around with it and they know what they're doing. So we have that proven track record. We have the vision. We can prove the funnel of properties that we have via our marketing channels that come in. So we have a great flow of potential acquisitions. And to be honest, the large corporations that are entering the market for real estate as an asset class are not necessarily used to real estate as an asset class. They're used to charts and numbers and not really living, breathing things. They're, as much as real estate's not so much living and breathing, there's a huge component of boots on the ground knowledge that you have to have, right? Like the wiring, the age of the roof, the condition of the windows, like, checking for moisture in the basement, like these small things that the average real estate investor knows off by heart, these larger corporations may not be as in touch with, and putting that into practical use is a lot harder. It's a lot easier said than done. And so I think that some of the bigger corporations are looking for companies that have boots on the ground and are in the trenches to do that for them.
Sure. And one thing I want to add to that, any investor in real estate the last 10 years, you close your eyes and you throw money at something, you look like a genius when the market's increasing 5, 10, 20, 30% year over year. It's in times like these where real operators perform. You know what I mean? If the fundamentals of your business is you're just borrowing and you have access to extremely cheap capital, and because the property values are increasing because of the market, if those are the only reasons why you are making money in your real estate business, then you're doomed for failure at some point in time. You're just riding a wave. For us, it was different. We did take on a lot of leverage, but we didn't go more than we thought that we could handle ourselves. We used our capital. Because we're using our capital, we had to control our costs. There is 2 of us, so we have to be profitable. And just those basic fundamentals, when the market shifts, it's just like, hey, we don't really have to change anything because we've always been lean. We've always been cautious about our costs. We've always made sure our every play we have done is profitable. So in times like this, if you look at the fundamentals of specifically what a hedge fund is, we're the perfect match.
Mm-hmm. So are you finding that now that the market's turned, are like the hedge funds and whatever other partners you have, are they shying away from certain things, or what's their take on your investments these days?
I think that the average person is following the trends, which is It's really risky to invest in real estate right now. But if you were to ask Jordan and myself, which maybe you're asking right now, like, what are you guys doing? We're bullish, like very bullish in this market. We are acquiring everything we can, because even though the interest rates are high, the prices are down. So when you look at it, the properties are on sale. Interest rates aren't always going to be this high, and we think the interest rates will cool and the prices will come back. But now's a great time to pick up property. So I think we're cautious as to what we're getting. We're careful with the capex that needs to go out for it, and that's a key one as well. Is like in this market, you may be able to pick up good deals that don't necessarily you need to put in as much renovation costs to get out what you want in the end. So we're careful with how much capital expenditure has to go into the deal cash-wise, but we're still picking up aggressively.
Yeah, correct.
So what would be some of the criteria that you're looking for now? What are the key things?
Good properties that make money.
Let me explain. He's right. He's not wrong. I mean, you know what? We're focused on cash flow. Like I said earlier, right now, like we want a property that will grow in value, obviously, but that's every property that we want. But currently in this market, cash flow is what we're focused on. So high cap rates, net positive cash flows, and also room to like expand and force the value through value add in the future. So we have some properties now that are cash flowing positive because of the simple renovations we've done, but we've set them up and already applied for permits for future renovations that we'll do when we believe the market's going to get hotter again. So maybe, building out that full extra unit or whatever it may be. So
when you say cash flow, like, is there a certain metric you're going by? Is there a certain amount of cash flow that you're looking for based on a purchase price or based on some other metrics?
Yeah, hard to answer that. Like, yeah, you'd have to base it against something, right? Like the cash flow has to be put against something. So like a purchase price or something. But I think that if we can get a cap rate that's a few percent over our interest rate, generally speaking, it should suffice for a positive net cash flow. So for example, like right now, if the interest rate is 6% in the market, right, that's what you're going to get a mortgage on. We're looking for something that's going to be, 8 and up in cap rate, because that will generally give a good idea of cash flow. But we want as high of cap rates as possible. So I would say infinite money and cash flow is what we're looking for.
Okay. And I know you guys kind of touched on this a little bit earlier, but what markets are you really focusing on today?
Hamilton, for sure. And as the market peels back a bit, I believe there's going to be more opportunity there. We like Hamilton. It's close to home. And, it's been turning over for so many years. So I think it's really in a good place. The Niagara region for sure, the entire Niagara region, and then up north as well in Sault Ste. Marie.
Okay. Maybe just to kind of touch a little bit back onto the music thing. So tell me about music as an investment. Like, how do you... I've never looked into it, so I don't really know what that's like. But let's say somebody has some money and they're looking to invest it into the music industry. How would that work?
So there's really two ways. The traditional way would be investing directly into the content creation, which is a little risky, right? No one can really guarantee what a specific content is going to do and how the market is going to respond to it. You can project it, but there is no guarantees. Why we're seeing this new emergence of large capital firms and large institutions getting involved in music is because of streaming platforms and these different things. Music is now able to be measured. Okay, you're able to predict, hey, if there's X amount of subscribers on Spotify, Apple Music, all these streaming platforms now, there's X amount of people that have smartphones by 5 years from now, that number is going to double from people who are using these, then it's easier to make certain capital injections and projections. So really there's two sides. You have your catalog, your publishing, and your master side. That's what you're hearing on the news. Justin Bieber sells his catalog for $300 million. QC was bought up by Justin Bieber's manager, Scooter Braun, for $300 million. Deals like that is more of your publishing, mastering, institutional side. And then the ones that you don't really hear about, because it's more on the incubation level, is more like your content creation. So investing in a record label or investing in an artist so he's able to record, get music videos done, so on and so forth, put on shows, whatever it may be. But those are really the two different avenues, in my opinion.
Let's say you are investing in content creation. What exactly are you getting as an investor? Are you getting royalties? Are you getting a piece of the pie on sales?
It all depends. It's just like real estate, right? It all depends on the deal. There might be someone out there that says, hey, you know what? I really need this investment. I don't know when I can guarantee your return, so I'm going to give you equity, right? Or they might say, hey, I know exactly what I'm doing. I'm giving you X amount of percent of return. I'll give it to you in 2 years, and that's all I'm willing to do. Or it could be a combination of both. But like real estate, it varies from deal to deal.
So are you guys both involved in both the businesses, the real estate and the music, or are you kind of spearheading one thing each?
No, we're both involved in both.
Okay. Can you just kind of break down your roles just for me to understand out of curiosity? What's your roles with real estate individually?
Yeah. So real estate, I would say Evan is more on the acquisition side. I'm more on the construction side. We both share the financing side together, whether it's on acquisition financing or refinancing and takeout acquisition, like whatever it may be. On our exit strategy, we share that. But I would say I'm more on the construction side. And then music side, I'm more on the content creation side. And then Evan is more on the institutional side. So, dealing with the publishing, the masters, tying in things on that level, that side of it.
Got it. I always like to ask, people are often like investing, but sometimes not everyone knows why they're just doing it. What's the reason that you guys are investing? Do you have a certain target in mind? What will you have to reach in order to feel like you've accomplished your goals?
In terms of what?
Yeah, I think to be honest with you, Jordan and I make it a point to make sure that we celebrate the victories along the way. And I think it's really, really important to the investor who is scaling or getting into real estate to achieve X, that like we have achieved all of the goals we once had, okay? And then we've achieved the next set of goals that we once had. And so every time, we're constantly, we have meetings, monthly setting new targets and new goals to achieve. We literally just did this meeting this morning. So we're reviewing all of our goals, and targets. So I think we feel really happy with what we've done, and and it just re-energizes us to achieve like what we want in the future. We want to house an enormous amount of families. That's really, really what it is. We want to provide incredible living accommodations for a ridiculous number of people. And that's what we're laser focused on the real estate side. We know that if that's taken care of, then everything else is really taken care of. Correct. At the same time.
You know what? And to expand on that, we're looking for problems out there and we're trying to solve them. That's really what it is. So there's a huge problem with housing. We're going to try and solve it. Hey, there's a huge problem in entertainment with content creation and having the right backing and the right partnerships. Cool. We're going to solve it. Hey, there's people that got a ton of money and they want to get into different asset classes but don't know how. We'll solve that problem too. And whatever happens along the journey of solving these problems, we just roll with it.
Yeah. That's very cool. So is there anything, like we touched on a little bit of your the real estate, the music? Is there anything you feel that you would want to expand on or discuss as well while we're on this?
I think that those are our two main focuses right now. There's levels and layers within both, but those are our focuses.
Okay, cool. Well, I mean, I love what you guys are doing. I love that you're in a bunch of different markets and not afraid to go up north and go to the Niagara region and own all these properties. And it's very cool that you're self-funded and all that. And I'd love to, like, at some point, kind of discuss the whole hedge fund thing a little bit more in detail at another point. But that's very cool as well, and the networking is awesome. So thank you for sharing your story. And do you just want to maybe share with people how they can reach you and the services that you're offering today?
Yeah. So my name Jordan King. You can reach me. You're probably on Instagram. King Com KOMM 91. That is my account. Our website is Tuk Capital, TUK Capital.com. You can find all of our information. Evan?
Yep, my name's Evan Ungar. You can reach me on Instagram at Evan Ungar, UNGAR. Yeah, that's where
all
you
right.
can find us.
And last thing, services. What are you guys offering?
Really, it's real estate is turnkey services for really anything, right? If you're an investor, you're completely hands off. You don't want to do anything, but just kind of watch your portfolio grow. We deal with the property management, from the construction to the acquisition to the takeout refinance, like all steps out of the way. And then same thing on the music side, right? Whether it's content creation side or investors are looking to invest, there's always a way we could make it work.
Very cool.
So I just want to clarify on the real estate side Jordan's correct. Like, we do full turnkey, and within that full turnkey model, we offer each level and stage for people who aren't looking for full turnkey. So if you're an investor and I have $1 million liquid and I want to grow a real estate portfolio, yeah, we'll take care of that and do that full turnkey with you. But also, if you're an individual investor who's in the market and you're looking to acquire an off-market property, we find those off-market deals for you with your criteria. Or you have a property that's distressed and you want to get rid of it, we'll buy it. And then everything in between that as well. So from private mortgages to conventional mortgages to renovation and construction to property management and tenanting that property. So we will do full turnkey services for larger investors, and we will also provide those individual services for anybody in the market.
Yeah, very cool. Well, Evan and Jordan, thank you guys. I appreciate you sharing your story, your journey, and I look forward to staying in touch. Thanks for listening to this episode. Your support is truly appreciated. And if you can share this with a friend or family member that might benefit from the information, remember, our goal is to motivate and inspire others to take action and to build wealth and to become well off. Enjoy the rest of your day.